I think let's welcome in the management of the next management who's with us. Raymond is the company in focus, and we've had them waiting for a bit. Apologies for that. Third quarter of course, came and went. The company, it says, has said that the potential revenue from the real estate business is over 32,000 crore rupees. We have Amit Agarwal, Group CFO at the company, now joining us. Amit, good to have you with us here. As I said, apologies to keep you waiting. Prashant here. Could you give us a sense of how many additional joint development agreements are under evaluation, and what is the estimated revenue potential from these projects?
As you know, thank you for having me, and as you all know very well, that we continuously evaluate the various real estate JDA opportunities, and at any point of time there are almost 6 to 7 opportunities which are almost there to be finalized, but actually you pick it out from there almost 1 to 2 opportunities. So if you look as of now, we have already signed more than 6 JDA, which translates to more than 14,000 crores of revenue. And we continuously work on this. And we believe that over the next 3 years or so, we should have a share from our Thane land parcel, 50% from the revenue and 50% from the JDA projects. That's a broad theme with which we are working on. And we are seeing opportunities in the JDA world.
And what timelines are you working on in terms of realizing this revenue, Amit? This is Mangalam here. And I also wanted your thoughts on, the value growth guidance. You had earlier given 20 to 25%. Do you think you can exceed that? We're just about 15 days away from the end of this financial year. And a word on collections too.
So if you look at it, very simple. I think the revenue potential, any project which you sign up, it takes almost 18 to 20, 22 months before you start the project. Once you sign, it takes that much of time, getting the government approvals, talking to the various people in terms of the apartments, that which kind of a layout and everything. So that is almost 18 to 20 months. And after that, it's a project, and we have demonstrated our performance. We talk about a 5 to 6 years a project should take, but we have been able to complete the project faster. So I think overall you can talk that these projects, the time we sign, from there, anything between 6 to 7 years, you would realize the full potential. And that's what we are talking about. But Thane, as you know, continues to deliver good growth in the revenues, as well as our project in Bandra, which has started to do very well, has also given a good potential on the revenue side.
Got that. On the engineering business, Amit, if you can give us a sense, I think you've mentioned that you remain particularly excited about the aerospace sector. Could you give us a sense of what's happening there? What kind of work are you seeing, size of work that you're getting, and the potential?
Absolutely. No, so aerospace is a great opportunity. You see, India as a country is just about, it's a aerospace component market is almost like a $100 billion market, $100 billion market. India is almost 1.5 to 2%. There is a huge potential for India to grow into that market. And we are looking clearly to be one of the participants into that market. We supply the engine critical components. We are expanding the facility. This year, obviously, the revenue increase would not happen significantly because of a simple reason. One of the large aircraft manufacturers we all know was on an extended strike with the laborers, and that has led to the revenue pushing to the next year. So in the next year, we are seeing very clearly anything between 25 to 30% growth on the aerospace business. And over the next 3 years, we clearly double the revenue of the aerospace business with a very high margin analysis.
Okay, so put all of this together, could you give us a sense of how FY26 will shape up? I mean, do you have that clarity, both on revenues and margins as well? I mean, would you see margins above 15% overall?
If you look at it, as you know, that we are in the process of the demerger of the real estate business from the Raymond Limited. So you would see that the demerger gets completed somewhere in June, July timeframe. And after that, the Raymond Limited will have only the engineering business, and Raymond Realty will run the sort of real estate business. And if you look at it in terms of the revenue, I think we are very clear that we will be achieving the 20% growth clearly in terms of the revenue for the real estate business, as well as the margin improvement will continue to happen. So that is a clear journey. We have clear projects to be outlaid. Similarly, in the engineering sector, also considering that the aerospace is doing very well, even the auto sector. Maybe there is a bit of a lull in the European market. And, our auto components business has a lot of exports. And at this juncture, with what all is happening with the tariffs all across the globe, I think it becomes a little challenging to say exactly we will be able to deliver. If things remain in a similar manner, which we have today, I think we should be able to do more than 20% on an engineering business, also the growth.
All right, Amit, thank you so much for joining in. We'll discuss all the other parts of your business immediately after you report your results. You'll be at liberty to share some more granular details as well. But for now, thank you for giving us the insight.